Hey guys, so in this video we will show you our risk management that will help you take your trading to the next level. Make sure to click the subscribe button and to hit the notification bell so you know exactly when we release a new video. Also, right now, comment below and tell us what topics you want us to cover, as we always look at the comments to decide what to create next. So first, how to manage your risk. Today's lesson outline with the points for discussion will be how to correct your mindset, the effective risk reward, and I'm gonna ask you some questions to ask yourself, where to place stops, and calculate your risk and reward. Here are some inspiring words by the famous Leonardo da Vinci, which says, "Learning is the only thing the mind never exhausts, never fears, and never regrets." So we start with having the correct mindset. Once you have the facts, it is decision time. You can choose to do nothing or seek to reduce the exposures, or to hedge them in whole or in part. The unforgivable sins are to fail to consider the risk or fail to act on any decisions. The risk culture of your business is critical, and you must be established at the most senior level. Above all, it calls for honesty. Too often individuals are criticized for decisions that at the time were in tune with their organization's perceived appetite for risk, but it is never easy to set down effective guidelines, and the range of exposures for even a simple transaction can be extensive. For example, an exporter might have to consider counterparty credit risk, funding risk, and interest rate risk. The permutations are endless, and the costs of hedging transactions to reduce or eliminate every possible exposure could potentially swallow any profit from a deal. While losses are likely to be quantitative, the potentially infinite number of risk combinations means that the skills needed to make good decisions are usually qualitative. Even a computer program to consider every conceivable permutation of risk needs to be told what level of exposure is acceptable. Any program is only as good as the parameters and data fed into it by people who have themselves been conditioned by experience. Effective risk management requires thinking the unthinkable. This does not in any way lessen the great value of the many sophisticated risk management systems available. The problems come if people start to think of them and the models that are based on as infallible. It is also common for the development of control systems to come after any new risk-related products. Be careful not to bet the business until the exposure is known. To be in business, you must make decisions involving risk. However sophisticated the tools at your disposal, you can never hope to provide for every contingency, but unpleasant surprises should be kept to a minimum. Now, ask yourself, do you grade the risks faced? Do you know the maximum potential loss for each trade? Are decisions made on the basis of reliable information? Are the risks larger than the profits for each trade? We stop out of a trade when we no longer want to hold onto that particular position. The question that arises is, why do we want to get out of that trade? There can be two reasons for stopping out of a trade. Either the market tells us that our intrinsic view or directional assessment itself was wrong, or we stop out of a trade even if we still believe in our basic bullish or bearish reading, because we think we can establish another position at a better level than the previous one. The effort should be to choose a meaningful stop loss, which is neither too close to the entry to get activated soon after the entry, only to have the market go back in the original direction thereafter, nor so far away from the entry that we have no time or space left for follow-up action. The difficult part is that it requires us to have a trading plan or strategy, and to choose our entry much more carefully than we tend to do in accordance to that plan. In the first case, when our directional reading has been proved wrong, we should look to enter into a trade in the opposite direction, a case of stop and reverse. It needs to be pointed out here that it is not necessary to stop and reverse at the same instance and level all the time. If you are an intra-week or longer trader, you can enter into a reverse trade after stopping out of the original trade, allowing yourself time to reformulate your strategy. Traders have no business trading if risk-reward analysis is not at the top of their concerns. If a trader has no idea of the potential profit return on any given trade relative to the initial risk of taking the trade at all, his long-term profitability is in question. Of course, for every trader, the best case scenario would be to minimize the first and maximize the second. But how do you get a handle on the potential reward in any investment and the risk you might be taking on? Technical analysis, what's popularly called charting, can help traders evaluate both risk and reward. The technical indicators which are used to read the charts will give you the simplest kind of picture you can get of a currency's performance. Simply by placing support and resistance and by looking at the past performance of a currency, you can get a record of its closing price over time. Once all of the elements are in place for an analysis, you can calculate your pips difference and verify depending on the trend of the market if you will make more profit or loss, and if it is after all worth the position. For example, if the market is in a bullish situation, you need to have a higher pips difference between your buy stop order and your resistance price than between your support price and your buy stop order. So your reward will be maximized and your risk will be minimized. In each case, upside, which is bullish, or downside, which is bearish, the tools of technical analysis will tell you important things about risk and reward. Don't trade without them. Now, if you want to learn more about exact intraday entry strategies, head over to our free Telegram channel, where we also send daily free signals. So if you are enjoying this new format of more frequent video releases, make sure to hit the thumbs up button and comment below right now and let us know your thoughts and questions, as we love hearing from you all. And it lets us know that you want more videos more often. So thanks for watching, and I'll see you in the next episode.